Morning, morning. How is everybody this morning? I'm your boss, Joe Boss. This is the Plan the Profit daily trading stream. Welcome, everybody. Man, you know what? I've been up already for like 5-ish hours today, going through like 150 emails, trying to get through all the research, answer everyone's DMs from the trade group. Man, it's been a busy morning. I started the stream just a tad late, just about 5 minutes late. I just had to crunch in getting in this coffee. a little nice thing, something to keep me going here for the rest of this day, because it's not done yet for me. It's not done yet. We got to get this stream on the road. So, with all that said, let's go ahead and transition over. We have some week ahead outlooks every single Friday. A bunch of institutions release their outlooks for the week ahead. And we'll be getting more over the next 48 hours. And for the ones that are freely accessible and ready to share, that are, you know, not behind any sort of paywall or account or whatever, those that are freely and publicly available, I'll share in the Outlooks channel in the Plan the Profit Discord. I'll go over a couple of these outlooks because I haven't gone through them yet myself, and I'd like to see generally what are the expectations for the week ahead here. It's nice to see on the Friday going into the following week kind of what you should probably be anticipating, so then you don't have to do so much work over the weekend, because you know what, the weekend isn't absolutely always for just constant trading, constant trade planning. Some of us have families and friends and wives and, you know, siblings and partners and children. Like we got a life outside of this, you know, we'd like to enjoy. And it's nice to have the weekends for that, you know? So these outlooks can help give us an idea of what to expect for the week ahead, so we don't have to do maybe so much work over the weekend. Give us a little bit of a help us prop us up a little bit. And speaking about getting propped up, I kind of called it. I mean, you can probably see here in these tabs in the top left-hand corner. Maybe you can't see it behind the sound thing at the very, very top. But I have like 5 articles today talking about China showing more strength. Check this out. Bridgewater widens lead in China race. China asked for big banks to stagger and adjust dollar purchases. Coal prices jump to 4-month high on China power demand. Then this is a geopolitical one. Biden administration. Now, know that Nikkei, they're Japanese, so they're kind of doing a bit of a political hit piece here on China, but it's important to see kind of what they're still saying, what the sentiment is. And then here, another one from Nikkei, also, avoid China, sentiment drives investors from US stocks. So it's interesting to see how the sentiment in Japan around China is pretty negative. But then you go to Bloomberg, it's pretty all right. You go to Reuters, it's still pretty neutral, on the more negative side still. And then this is just straight up like, oh man, this is bad. Now, not to say that there isn't anything bad about what's going on in China's economy, but there are economists, there are people who run institutions saying, you know, the negativity might be overhyped a bit. So I'm looking for any more research I can get my hands on, any more additional commentary I can get my hands on, to learn more about why these guys think that. Alrighty, hello Ari, nice to see you in the chat. Nice to see it in the chat. We have also some of these outlooks that I got here. This is some of the outlooks from yesterday. Let's see here. Bridging the gap, economy progress of Hispanic Americans. This is a huge, huge report out of Wells Fargo on this today. And then will be in the Planet Profit Discord. And there's a cost of living analysis here by Westpac for Australians, which is good. Going to be going over that a bit later. And then this is the market podcast and economic note out of ASB on the state of the New Zealand economy. A bit of economic resilience is good to see, but there are a couple of important caveats. And then going through and reading this, strong services activity, so runners and riders, and then what's next. Like, this is the exact sort of stuff that'll keep the pep in you as you go through trading the rest of this month. Getting this sort of information helps make better quality decisions. August CPI turbulence on inflation's descent. This is interesting. This is a bit more of a critique on saying, hey, you know, even though inflation is ramping up higher, this is probably gonna keep going down from here. These jumps are mostly just from energy, and who knows how long that'll go on for. How long OPEC will continue to pause and all that good stuff. Hello, Rick. Nice to see you, my man. It's going to be a lot more of a chill stream. Let's see here. Let me go ahead and pull up some more charts. Let me go ahead and hide the research real quick. And let's go to NQ. See how NQ has done so far on the day. Yesterday, nice little positive drift. It's probably going to end up a bit more flatter today. Yeah, probably will end a bit more on the flat side. Somewhere in this 100-point range. It's probably not going to move all too much going into the end of week here. Let's see here. What else is there? On the euro dollar front, I went ahead and I did take this short at the peak in this distribution here. We came up here. I took the shot, put the stop in. And now I'm just going to wait till the end of day. I also did USD CAD because, no, the Canadian economy is actually still not doing too hot compared to the United States. I mean, most economies aren't, quite frankly, but when you go ahead and you look at, like, for example, this outlook I brought up yesterday, Canada's economic engine is gearing down from RBC, one of the largest banks out of Canada, giving this huge report on province by province economic breakdowns within Canada. And this is just, see, Canada, the GDP growth softens despite population surge. It's just like, I mean, outside of some of the commodity benefits within Canada, there's a lot of people, a lot of skilled workers are leaving Canada because they just don't like the political situation within Canada. One of the analysts that I like to listen to that I found on YouTube, Mark Meldrum, I assume a lot of you guys watch Mark Meldrum, and I've been sending out his videos into the Outlooks channel for, like, I don't know, last few years maybe. He's moving to the United States, and he was a Canadian, and he's talked about how he's managed some FX trades as he's been moving his assets from Canadian denominations to US dollar denominations. Yeah. So it's not looking too hot for the Canadians. So when I saw this just continue to go, I'm like, oh man, maybe there's another shot here on the Canadian side of things, at least into the end of week here. We'll have to see how the month plays out at this point. Yeah, it's still not totally optimal in my opinion, but on the day, there was a shot on the day and I took that shot, and so far so good. So far so good. We'll see if we can get up to that 135.35 today on the USD CAD. We'll see how that all plays out. And I posted the trades and all this stuff in my little boss trades chat and all that good stuff. And if you want access to these indicators, you can get a 10-day trial to the indicators and the trade group by going to the WAP link in the description and signing up. All good. Yeah, and the 10-day trial's free. So with that pretty much done, we can do a little bit more research. Actually, real quick, let's just check out how some of these markets are doing today here. So biggest winner today is Aussie yen. Wow. That is huge. Euro yen. So yen, yeah, yen fell. Actually, that looks like probably the top for the day is in on the euro yen side of things. Yep, you'd probably have to have a pretty far stop on short right here and now, though. Yeah, what's the likelihood of closing? Yeah, it's not super fantastic. It's not like the best of the best probabilities, and you could easily get some more bullish continuation here. But going into the end of the day, I mean, there's a shot here, and I'll just leave this here, see how this pans out. But yeah, let's see here, New Zealand. Yeah, New Zealand's it's going to be a little bit noisy here on that one. Let me go ahead and hide the research so it's just a little easier to see. Aussie dollar looks like it's probably going to continue drifting sideways. Aussie has been rallying here, probably on the little bit of positive news coming out of China. All that extra stimulus we've been seeing. And now, don't get me wrong, it's not fantastic stimulus. It's not like huge amounts of stimulus. They're just giving it piecemeal by piecemeal as the days go by. But as the commentary continues for some hope that China gets their stuff under control, we'll see if they actually fall apart or not as an economy. And I am looking for any single little bit of commentary I can get on China right now. And the risks around it. Whoa, look at that on the pound yen. Did we hit that top on the... Yeah, we did hit a likely peak for the day here. Yeah, you'd have had to put your stop like way far. Yeah, this is... Yeah, that doesn't look too attractive, but yeah, you'd probably have to put your stop super far there. Yeah. On the dollar yen side of things, I don't know. It could probably tap prices still above 148 sometime, but everyone who's the Japanese government is just hating looking at this dollar yen just grind up higher to the 150 spot. Like they are not happy at all. Oh yeah. 149 is still on the table for this month for sure. 149 is still on the table for this month. How about for like the week ahead here? So let's call that 0.5, and that's 1. So 0.5 I mean, 0.5 gets you about 40 pips away from there, and 0.1 overshoots that by about 30 pips. So, I mean, if I had to lean one way or the other, I'd probably shoot for like the 30 pips over. Yeah. Because wasn't there some news actually that came out? Actually, I think by Ueda, talking about like a kind of saying, oh, you know, we're actually not that hawkish, kind of tampering down on the hawkish sentiment. I think I saw an article on that printed today. I don't know if anyone else saw that come down their inbox, but I read something about that today. Don't know if the market will actually believe them or not. But again, you got to stay very, very nimble when, you know, when a central bank says they're going to do something. You really have to be watching what other market participants are doing and how they're interpreting that information in order to be able to accurately have future expectations actually understood, to figure out, oh, this is how I should reasonably actually anticipate yen to move or dollar to move. Because when you're trading with other people, and you got to understand how those people are reacting and how they're interpreting future market expectations differently than you. Oh, almost forgot about the music again. Sorry about that. Let's get the good old music going. Yep, just waiting on it to load. Ah, boy, oh boy. So, good morning, everybody joining the stream here. We're about 20 minutes in now, and we pretty much got most of what we wanted for the day done. We can go through a bit more research, though, if we want. Let's see here. Maybe bring up the DXY. Yeah, I have an expectation here. I'll have to bring this up now that I've pulled up the chart. I have a moderate expectation that this ends up being the peak on the month here for the DXY. You come up to around here, call it the upper half of 105. I mean, sure, I'd be careful once we cross, let's say, 106.2. I'd start to be careful around here. This is all tail risk stuff here. But yeah, I wouldn't mind taking a shot on the short side here for the DXY if we come up to, I'd say, the 105.5, 106. This whole upper half of the handle, the 105 handle. So let's see, that's 0.4, and let's call it 0.8. So 0.4 would be up to 105.76. And let's call 108, 106 point. Oh yeah, that actually lines up. That lines up real well with the weekly distribution of where we probably top out. Yeah, some people asking me how I did yesterday on the ECB stuff. I didn't do too well. I lost on those $0 trades. But then I went ahead and I showed those two trades I took today, and I've pretty much made back like 70% of what I've lost. So, like, even though guys, come on, like, euro dollar yesterday was absolutely insane. But do you see the size of these stops? Like, it's not my first rodeo of trading ECB meetings, my days. Like, this was pretty straightforward for me. It's like, either this thing was going to go in my favor, and it did. You can check the stream. It did for like a half a minute. It did. It you know, when that rate hike first got announced, everything went perfectly. And then I just got stopped on 2 trades. And now with the trades I've taken today, I've already made back 60-70% of what I lost yesterday. So, you know, what loss? What risk management? Yeah, I'm very, very happy with my approach to trading. Very, very happy with my approach to trading. And this is discretionary, so you really have to be careful, right? When you do these types of discretionary trades, like, if you're not if you have any super high degree of uncertainty about what you're doing, you need to factor that in. And you're really not going to have any understanding of how uncertain you are until you actually understand what it is you're literally doing. So if you have a low level of basic competence about business, accounting, finance, and economics, and, you know, some statistics, say, it's pretty hard. And usually people get educated on that stuff throughout high school and college, community college, right? So people get that basic education and then they never figure out how to actually properly apply it. But they still know it, right? And then it's just a matter of figuring out when's a good time to apply that knowledge. But there's a lot of people who try to get into trading and they don't have any of that knowledge, and they got to spend more time. They got to dedicate more time to just getting some basic education just about those topics. Doesn't mean that they have to learn absolutely everything about those in order to trade. They just have to be somewhat semi-competent, so they just literally know what they're doing and are actually competent and knowledgeable of the risks that they're taking. Like, stupid, you know, what is it, a fool and his money are shortly departed, something along those lines. So don't be a fool, right? But, you know, even when you have that baseline level of competency about just what's going on in the world and those topics, it doesn't mean that you're actually viewing markets in the same way that other market participants are. The guys who actually have the billions of dollars that are moving things, right? So now you have to learn how those guys are viewing markets. And that's where things like the dollar smile theory come in, and understanding a growth inflation matrix come in. And those, don't get me wrong, those are very macro theories. Those are very macro interpretations of markets, because it's the US dollar and the growth and inflation of an entire economy that you have to take into account for those two theories. But even on smaller scales, there are theories like that for individual sectors and other sorts of asset classes like commodities. And depending on what it is you're trading, you're going to have to learn what are those practical market theories are. And that just comes down to talking with more people, seeing who's actually around, who's doing good research, and always being hungry for more information, more knowledge, just doing the research. And that's what I try to do in my Discord. I try to share and disperse that information as much as possible. At least all the free and publicly available information, right? You can't distribute stuff you're not allowed to distribute. Man. Oh boy, oh boy. But yeah, not much probably going to be going on for the rest of the day. What's going on with the French? Hold on, what's going on with the French? The French, their stock market is just killing it today. Something happened in France? Yeah, man, the French stock market is almost up twice as much as the German stock market, as the DAX, and it's definitely up twice as much as the stocks 50. What is going on in France right now? I did not see anything come down the pipe when it comes down to France, so man, good for France. Whatever's going on. But this is nice to see. Positive sentiment for Europe. And it looks like the 10 biggest companies within the S&P 500 are holding up as well. Of course, these 10 companies are outperforming the S&P itself. Right about. Well, then again, this only gives you returns during market hours. This is 24/7, right? This is Ueda's chart. Let's see here. Let's check out the ES. Yeah, it'll probably end up there for the day. Wow, check out that distribution. Looks like you have a little bit of a multimodal distribution here. Yeah, call it a bimodal distribution. You got a peak right there, a little bit of a trough, and then another small peak right there. So you got a peak here and a peak here. So this would be where you get probably a big chunk of your bullish trading day closes in this area right here. And then this peak is probably where you see most of your bearish trading day closes. Yeah, just interpreting a little bit of statistics can go quite a ways. Again, appreciate all everybody for sticking around and watching. It's absolutely great that, you know, like I can just will my way to just streaming every single day, sharing as much research as I can get every single day. You know, bringing up topics that not too many more people are talking about. The UAW officially on strike today. The union targeted select Midwest plants.
The United Auto Workers going on strike as UAW contract talks have fallen through. This, of course, coming against a backdrop of a historic bit of industrial action taking place against all three of Detroit's biggest car makers. This is, of course, the time when these labor contracts expired. A strike coming as the union and the big three, General Motors, Ford, and Stellantis, remain far apart on wages. The latest offer from Ford was of a 20% increase. We've got UAW wanting 36% here. They're also far apart on benefits.
Yep. Today is the first day that the UAW is officially on strike. And actually, to help organize more of the research around the UAW strike, since it's become official, I've set up a thread in the geopolitics channel. So instead of just dumping all the research that I find and putting it into the geopolitics channel, I've just, you know, set up a thread, and now I'm putting all the stuff for the thread, all the UAW stuff in that thread now. So tonight, for the first time in our history, we will strike all three of the big three auto manufacturers in the United States at once. GM, Ford, and Stellantis. And Stellantis is the parent company of well, they assemble the Chevrolet cars. Yeah. Let's see here. Automakers were quick to condemn the strike. We immediately put the company in contingency mode and will take the appropriate structural decisions to protect our North American operations. So, how much economic damage is this going to cause, everybody? Let's see here. I think I saw a number like $5 billion or something. Yeah. Let's see here. Ford's Farley said if the UAW proposal, let's see here. Well, then is it in this one here, the Axios report? Let's see. I was certain one of these articles would actually have a number on the estimated economic damage from these strikes. Oh, yeah, there it goes. Anderson Economic Group reports that a 10-day strike at all three would lead to direct losses of $5.6 billion and a possible one-quarter recession in Michigan, Indiana, and Ohio. So U.S. economic growth is going to take a hit. I mean, it was already expected to take a hit due to the increase in freight costs. Freight is not looking so great. Let's see here. Some stuff out of Japan. They had a geopolitical shuffling of a cabinet. It didn't change any of the opinion polls for the Prime Minister of Japan. The survey conducted Wednesday and Thursday put the cabinet's disapproval rating at 51%, up by 1%. So these people are not popular in Japan politically. No. Yeah, not popular. And then we got a bit of research here out of Danske Bank relating to Japan, which is actually quite apt considering all the yen pairs are up and away, and the yen itself is down, and in the hole here. Let's see here. The inflation target has been met for 16 consecutive months, but the reflation narrative has lost some steam recently in Japan. We think the data supports another tweak of yield curve control this year, most likely in October, so upcoming in this next month, as one last step ahead of completely dismantling yield curve control. We expect enough reflation traction for the Bank of Japan to hike its policy rate to 0 in the second quarter of 2024. However, we think there is a long way to a situation where the BOJ can tighten much further than that. We expect dollar yen to move towards 130 on the 6 to 12 month time horizon. So that's about 20 cents lower. That's quite a move there, Cotton. Primarily as we deem long US yields are at or around peak, and that the global environment favors the yen. Gotcha. And this is a whole little 5-page report, so this will be good to look at this breakdown. And I'll be posting this in the Outlooks channel, the Plan the Profit Discord. There's also some review here of the ECB. Man, it was the first hour of the stream yesterday was all well and good, and then the second hour of the stream was just kind of like it was kind of boring, the second hour of the stream. But that's usually how the ECB press conferences go, usually after the fact. Usually it's just like, oh, leave this on in the background while I make breakfast or make lunch or make dinner. The ECB decided to hike once more, but suggested clearly that rates may not rise further. I think, no, I'm pretty sure Lagarde said we're going to remain data dependent. And yeah, I mean, I just got something out of Financial Juice from Lagarde today because she gave a speech. Quote, "We have not discussed rate cuts. It will be on a data-dependent basis on what we do next on rates. The length and level of time will matter significantly for how long they hold rates." I mean, I don't know about you guys, but I don't know if that's particularly super hawkish. Doesn't sound particularly super hawkish to me. So, most of the market's going to be interpreting this as dovish. Here's Seb. Yep. Initial market reactions were for a weaker euro, with long euro rates dipping on a weaker growth outlook, and expectations that the policy rate peak may have been reached. Given the risk spectrum, we think markets should price some risks for another hike. Our main scenario is that the next move will be to cut in mid-2024. Yeah, I sort of agree with this. And then Danske Bank also came out with their flash ECB review. Let's see here. What's this? We recommend to pay for the December 2023 ECB meeting. No additional ECB hikes is what Danske Bank's calling for. The cooling economy lowers staff projections of growth and core inflation. ECB has finished hiking, but paying the December ECB meeting is attractive from a risk-reward perspective. So let's read what they have to say here. With the ECB guiding that its policy rate has reached, quote, levels that have been maintained as sufficiently long duration, we observe that markets are pricing a 4 basis points of additional hikes this year. And while our baseline is for the ECB not to make further rate hikes, we still recommend to pay the December 23 ECB meeting with an entry level of 4 basis points and a target of 12, which we perceive as an attractive risk reward. With the ECB hike today, we book 19.5 basis points of profit. Markets are pricing in 93 basis points of rate cuts in 2024, which is 7 basis points more than before yesterday's ECB meeting. So people are getting a little more confident about rate cuts in 2024. And it seems like today, now, after this ECB meeting, there is commentary of potentially a hike coming in December. It's getting thought of. It's getting priced. So we're going to go ahead and have to look at our outlooks and future expectations to figure out if that's, an actual decent risk to keep in mind or not going into December here. And then some commodity stuff. Natural gas week. United States exported a record volume of natural gas in the first half of 2023. I think this is like the most natural gas the United States has ever exported in its entire history. Nope. Can't find it that quickly, apparently. But apparently it's a huge, huge amount of natural gas compared to historical standards. Oh yeah, here it is. In 2017, the United States became a net exporter of natural gas for the first time since 1957, primarily because of increased LNG exports. Gotcha. So, alright, don't know what else I'm supposed to be reading here. Other than to get more detailed on the LNG market in the United States, right? Also, there's apparently been some problems going on with the facilities that are being striked against. In Australia, Chevron has these LNG platforms that are getting striked, and apparently there are some mechanical problems and failures going on as this strike is occurring. Union, here I'll zoom in here a bit. A Union Group Offshore Alliance said a turbine tripped at one of Wheatstone's 2 LNG trains, which convert natural gas into liquid, on the same day strikes escalated. So the strikes are escalating. Full at plant cuts down 25% of output. So this was absolutely not expected. Chevron has been saying, we're going to try and fix this. We're going to try and get production higher up. And a lot of the expectations of this strike were that, maybe at the tribunal on the 22nd, they're able to end the strike. And maybe they'll be able to end it. It seems fairly likely they'll be able to end it. But part of the time between now and then was that output would remain relatively constant. This is a huge fall off. This is a huge fall off. Chevron's Australian LNG facilities, including Gorgon, contribute over 5% to the global supply of LNG. So this isn't like a nothing burger. This could be a little disruptive. I mean, remember when these strikes were announced and when they commenced, LNG in Europe shot up like 11% according to the headlines. Workers have intensified their limited strikes, which have lasted up to 11 hours per day for the last 6 days. Over the next 2 weeks, they plan to halt work for up to 24 hours each day and refuse to perform crucial tasks like loading LNG tankers. Unions have stated that these actions will be strategically targeted with a focus on LNG exports, while domestic supplies for the Australians will remain unaffected. So that sounds nice, but this is what markets are focusing on, is those LNG exports. Analysts believe that the strikes pose minimal risks to supplies, as they are expected to be temporary, and key gas buyers maintain sufficient inventory. So yeah, right now everything's still calm and cool and collected, and shit might be hitting the fan here a little bit, but it doesn't seem like, unless the strike goes on further past the tribunal, it may not be that big of a deal for now. However, you can bet your butt that as we get closer to that tribunal date, there's going to be some hedging around that in the LNG markets. Okay, doke. Let's see here, and then all the China stuff. Oh, actually, we have some crypto news. FTX is getting liquidated. FTX gets court approval to sell billions in Bitcoin, Ethereum, and Solana. Let's pull up Bitcoin here. I don't know. I'd probably want to sell that Bitcoin there. Yeah, top for the day might be in on Bitcoin. I don't know if that's going to be an appropriate risk to reward, though. Because I'd probably want to see it come down to like down back to 26k, so maybe down $400 by end of day today here. We'll see. But yeah, the collapsed exchange's new management can sell billions of dollars in Solana, Bitcoin, and other assets. I mean, this was technically 2 days ago. This was technically on Wednesday. This was reported. But yeah, they can now sell $3.4 billion in assets to try and recoup some costs. Billions of dollars in customer cash disappeared, and now the exchange's new management is working to pay back creditors. Selling these assets will help plug the hole, which originally stood at $7 billion. There you go. And the Lightning Network. Coinbase CEO labeled Bitcoin the most important asset on Tuesday following an announcement that his company would integrate Lightning. This is also from the 13th. Oh man, this is good to see. Finally, Coinbase is getting onto Lightning. Which is kind of funny because there was this thing here. Apparently, who works at PayPal, yeah, accidentally paid $500,000 for a Bitcoin transaction fee. They overpaid $500,000 for a transaction fee. The incident, initially thought to be a, quote, fat-fingered mistake, has now been traced back to an issue within PayPal's processing system, according to a report by Mempool's Mononautical. This is the largest fee ever paid for a Bitcoin transaction in dollar terms. Not in BTC terms, in Satoshi, in dollar terms. And these guys have even said, we're also going to go to the people who mined this block to try and recover some of the money. Let's see here. Yeah, I think they're trying to... Yeah. Paxos is in contact with the miner to recoup the $500,000 that they sent. Hey, you just mined this block for us with this insane fee. Can you give us back that money? They don't technically need to give them back the money. They don't have to. It's not really how Bitcoin works, my dude. But yeah, this is good to see. This thing with the Lightning Network and Coinbase. That's very positive to see. Man, look at all the stuff we've covered so far. I mean, we didn't cover any of this geopolitical stuff here, so real quick, let's go over this. So they're trying in the House, in the US Congress, they're now trying to get something put out so then they can extend the amount of time they have in the House to talk about the fiscal funding bills for the United States. So yeah, House Republicans are discussing a 3 to 4 week stopgap funding measure to avert a partial government shutdown starting October 1st. That would push decisions on military and economic aid for Ukraine, as well as disaster relief into the regular fiscal 2024 spending bills. So yeah, they're gonna go ahead and just try and buy themselves a little bit more time going out into October to hash out whatever agreements they want with the Democrats on these spending bills. So that's the current state of funding in the United States. Partial government shutdowns aren't always great. Also, the DoD came out with this release. Space Policy Review and Strategy on Protection of Satellites. You know what was interesting? Elon Musk was at a special event for the All In podcast where he was talking about the risks that he is not paid or accommodated for taking by the US government when it comes down to Starlink. And he said, you know, we have a huge risk if there's a cyber attack against Starlink and the hacker asks the entire network, the entire Starlink network, to deorbit. Like, we have no insurance against that, and it would cost us tens of billions of dollars, I would assume. That sort of stuff, I'm pretty sure that's what this is in reference to. Strategy on protection of satellites. Because you know what's funny? I think Elon Musk talked about this exact risk on the exact same day here, September 14th. Yeah. Assuring critical space-based missions by accelerating the transition to more resilient architectures and by protecting and defending critical systems against counter-space threats. Strengthening the ability to detect and attribute hostile acts in, from, and to space, and protecting the joint force from adversary hostile use of space. Yeah. The unclassified report can be found here. Hello. Nice. A whole 19-page report on how the Department of Defense is approaching space policy, specifically in relation to the protection of satellites. This is actually quite helpful. One of the things, see, I'm very interested in space, and for the longest time, I've been very interested in looking into and following up with stuff around asteroid mining for the longest time. I'm very interested in that. The whole asteroid day stuff is very cool to me. Oh, yeah, and then we got this today, or later yesterday. Biden's son Hunter hit with gun charge. First for a US president's child. So, yep. This is hitting the fan on top of the impeachment inquiry on Biden. And as far as anything related to Trump goes, Trump's trial on Georgia election, this isn't starting in October. This is getting pushed back. Fulton County Superior Court Judge Scott McAfee cited logistical concerns and the array of unsettled legal issues in separating the trial of attorneys Kenneth Chesebro and Sidney Powell from Trump and the other 16 co-defendants. The trial date for Trump, the frontrunner, has not been set, and the judge indicated the case may have to be split up further. Yeah. It was scheduled to begin, apparently, October 23rd. Trump and several other defendants said that timeline would not give them enough time to prepare a defense. So, yeah, Trump is getting what he wants, and Biden is not getting what he wants. Yeah, so that's how geopolitics goes. And I've been making more money this entire stream. So the stream's been going on for an hour. I put on my trades like 2-3 hours ago, and I have probably made back 70, 80, 90. I'd have to actually check. I've made back more than half for sure of what I lost yesterday on those ECB trades. Perfecto. What a good risk management strategy would do for you. Well, we're getting close to my target. I'm expecting a little bit more here on the USD CAD. And on the euro dollar, it's not falling as fast as I'd like it to, but it seems like the top's in for the day there. Wow, look at New Zealand. That would have been so sweet. Oh man, look at that. That nice bout of volatility. Yeah, that looks good on the day. And then dollar yuan. Check that out. Dollar is weakening against yuan recently, huh? Yuan is gaining back a little bit of strength. I mean, it's back here to call it 729. It's back below 729. I mean, we're going to have to wait and see if the stimulus actually brings back any sort of significant growth or lifts any of the major concerns that people have about, especially the housing problems within China. Bloomberg Originals, the YouTube channel Bloomberg Originals, just actually posted a whole thing on titled Inside China's Property Crisis here. Yeah, 4 hours ago.
Deserted shopping malls, half-empty apartment complexes, abandoned construction sites. These are all signs of the crisis that has gripped China's property market, and also an illustration of how dramatically the fortunes of this sector have changed in the last few years.
Homebuyers are afraid of not getting the home that they paid for.
The problems China have now are deep-seated structural ones.
I think the consensus is already that for China, the property sales may not go back to yesterday.
China's property market is in a bunch of trouble. And because
Yeah, and I'd say this highlights a lot of the risks that people have been discussing over the last couple of years, frankly. And a nice little 8-minute video. Atriarch does his What's Up Beijing segments, and I always love watching those and following up on those, because those are entertaining and quite enlightening about China's current economic situation. And I wonder if in his next What's Up Beijing segment, he's going to talk about some of these glimmers of hope people are sprinkling around in this economic commentary and research we've been getting around China. It'll be interesting to actually read personally. I would like to see Danske Bank's next China research outlook. Alrighty, you guys, we've been going on for about an hour. I'm ready to call it for the week now. I'll be back on Monday. And I mean, if any of you guys want to hang out and go over more of this research and learn more about maybe how some of these indicators work, where I get this research, how you can essentially do the exact same research I'm doing here, or you just want to pick my brain, talk with me a bit about some of this stuff, Feel free to hop into the Plan the Profit Discord. Come hang out for a bit. Come chat with me. I'll actually hop into the trading room now. I'll mute and deafen myself till the stream is over. But if you watch this far for the whole freaking hour, thank you guys very much. Like, subscribe, all that great stuff. I appreciate each and every single one of you guys for watching my small channel, helping it grow and all that good stuff. Appreciate it. And hopefully you find the research done here and the topics and the outlooks and the breakdown of some future expectations here good, you know, enlightening. Alrighty, you guys. Thank you very much for watching. And I will see you guys in a bit.